Welcome to How to Invest Money, Stocks, Bonds, and Real Estate. Oh my. For the past few weeks, we've been talking about savings accounts and how you can use them to set up emergency funds or save money for a large purchase. Today, we're going to talk about how to potentially grow that money that's sitting in your savings account and only earning pennies a month. Before we move forward, I want to warn you that investing can skyrocket your earnings, but it can also dwindle them down to nothing. So you must keep in mind while deciding what you want to invest that some investments can be a gamble and your hard earned money can disappear in the blink of an eye. If you make the wrong move, of course. The good news is that even if you're not willing to take on the risk of stocks, there are still other avenues of investment that you can make that will give you a larger return on your investment than a savings account can give you. Investing doesn't have to be hard. You don't have to check the paper, your phone, or your computer every morning to see how your stock is doing, wondering whether you should keep it, buy it, or sell it. There are investment brokers that can do that for you for a fee, or even online accounts you can start that cost less than $5 a month. A few of the options you have for investing your money are stocks and equities, bonds, cash equivalents, and real estate. Some are going to give you higher yields than others, and some will give you quicker access to your money than others. The best thing to do is to look at what each option has to offer and decide what's best for you. If you feel that you would like more information on a particular investment, don't hesitate to let me know, and I'll be happy to elaborate a little bit more on each of them for you in subsequent videos. By the way, going back to yields, I just want to let you know that yields are what you get back from the money that you invest. Okay, so before we move on and start talking about the different avenues of investments, I want to go over a couple of terms. There's liquid assets and non-liquid assets. Now, a liquid asset is one that can be easily accessed and you can get your money right away. On the other hand, a non-liquid asset is tied up for a specific amount of time. So it's not like you can just go, withdraw your money and spend it. So we're going to be talking a little bit about liquid and non-liquid assets. So I wanted to make sure that everyone knows what those mean. Okay, moving on. We're going to talk about equities, also known as stocks. Now, equities are shares issued by a company. Basically, you're going to give the company your money and they're going to give you a small portion of the company. This makes you a shareholder. Now, you can leave your money invested in your shares and see if they go up or down, or you can sell them while they're up and walk away with the money that you've made or invest it in other stocks. These are non-liquid assets. Moving on to bonds. Now, bonds can be issued by a corporation, but they can also be issued by a government. When you buy a bond, you're loaning the government entity or corporation money, and they're agreeing to pay you back the same amount of money you lent them on a specific date with interest included. Bonds can be liquid or non-liquid depending on the term they are issued for. Cash equivalents. Money markets are considered cash equivalents because you have immediate access to your money, or like we said earlier, your money is liquid. Other examples of cash equivalents are commercial paper, treasury bills, and short-term government bonds. And again, that's where we talked about on the last slide how bonds can be liquid or non-liquid. Now, short term means that they have a maturity date of less than 3 months. Real estate. Real estate is basically buying land or a building and using it as an investment opportunity. There are a few different ways you can make money from real estate, but some are riskier than others. You can buy a property and flip it, buy a property and lease it or rent it. But keep in mind that when you lease or rent a property, you're at the mercy of the person that's leasing or renting it. It may not come out in the same condition it was rented out in. And lastly, you can buy a property and just sit on it till the return on it is more of an asset than the property itself. I realize that investing money can be scary in today's economy because so many people don't have a lot. So, what do you do if you don't have a lot of money to invest, but you still want to grow your savings? I have some options specifically for you. The first option is a money market. Money markets are a little bit safer than the stock market. They're essentially a savings account, but they give you a higher interest rate than a regular savings account. You can start one with as little as $500. But what if you don't have $500? I have an answer for you. Open a regular savings account. They usually require less than $50 to $100 opening deposit, and you can make small payments to it until you get enough to open a money market at a higher interest rate. Great. Then what? Let my money sit in an account earning 2% interest? Not interested. Wait, there's more. Now, once you have a decent amount of money in your money market, you start to have the same options as everybody else, and you can start looking at stocks, bonds, and real estate. Okay, so those options sound great, but I don't have more than $50 in my pocket at any given moment. So now what? Well, there is another option available to you if you don't have a massive amount of money to spend. These are a little bit riskier, and while they may make you money faster, they can also lose money just as fast. Interested yet? Too bad. I'm going to move on anyway. The other option you have available to you is what's called micro investing platform. You might have heard of these online or TV commercials. There are various companies offering these services, but I'll tell you about Acorn since that's the one that I use. Basically, you can open a personal account for $3 or a family account, which allows you to open accounts for your kids too for $5 a month. Once you have an account, you can either make regular payments to the account in any amount, or you can link your debit or credit card and do what's called a roundup. So what is a roundup? Here's what happens in a roundup. They round up any purchase made from a linked account, debit or credit card, to the next dollar. They invest the roundups into an Acorns Invest account when they add up to at least $5 from your linked accounts. Now I bet you're wondering what they do with the money. Well, once the money hits your Acorn account, they take that money and they invest it for you, creating an investment portfolio. Then you can decide how risky you want your portfolio to be, diversify your portfolio so all your money isn't in one spot, get investment support from a dedicated support team, or track your investments and how they're doing online from an app on your phone. Okay, I want to make sure that you know that I actually use this product. I'm not getting paid. I just really like that this gives me the ability to invest money without a huge upfront cost. I like the Acorn app. Even though I don't invest a lot of money in my Acorn account, I've been able to open an account for myself, my sons, and my nieces and nephews. I don't have huge deposits, but it does add up, and I'm making actual money off of my investments. Less than a year so far, and I believe I am up about $300. That is so much better than making pennies every month off of the same amount in a savings account. Before I go, I really want to emphasize that investing can be just as risky as gambling. Of course, that's depending on what you're investing in. Never take a risk with any amount of money that you cannot afford to lose. Payouts can be huge, but so can the losses. If you're ever interested in learning about how investing in the stock market can be a detrimental experience, research the stock market crash that started the Great Depression. It's also a good idea to discuss your investments with a tax preparer so they can give you tax information that is specific to your situation. Thank you for joining me today. I hope you learned some useful information, and don't forget to reach out to me if you'd like me to elaborate a little bit more on any of the topics I ever discuss.